Okay, here's a trade in the E-mini S&P. And as you can see, we've just been filled on this. It's a short. You can see the down red arrow with the price stating 1288.25. And we have just been filled on this trade. And you can see our, by the way, this is just after 12 noon my time, so just after 3 o'clock Eastern time. And you can see our initial protective stop, which is a buy stop, up above the market at 1289.75. So should the market rally or continue to rally, therefore move against us, we would be stopped out for a 6-tick stop per contract. We have 4 contracts here. So just move it over there a little bit. So we have some buy targets because we want to buy back our short position. Our first target is at 1287.50 for 3 ticks, and you can see that with the T1, and that's to buy 2 contracts. The 2 is on the left of that green tag. The second tag down says target 2 or T2 to buy 1 contract, and the fourth contract is right now set at target 3, which is 1285.25. Quite often what we will do is make an adjustment on that should the market sell off here and allow us to manage the trade manually. So this trade here is actually the first trade we've taken today. The market has been relatively quiet. It had a fairly good first hour. It was about 8 points, I think, a little maybe 825. One tick over the 8 points. And now we're getting some follow through lower here at this point. The dashed gold line at 1290 that you can see there, that horizontal line, that's the low for the first hour of trading. So, okay, we've reached our first objective there, and you can see that our stop has now been brought down to 1289 even. And so what we do, our basic trade management system is once the market moves 3 ticks in our favor, we exit one half of the position and then lower our risk on the second half of the position to that same amount, 3 ticks. So should the market at this stage rally up against us and hit 1289, we would lose 3 ticks on 2 contracts after having made 3 ticks on 2 contracts. So in essence, it would be a break-even trade less the cost of the commission. So obviously what we're hoping for now is the market will dip down and hit to 86.75, fill us on our second objective, and at that, okay, just tap in there, and our stop, you can see now, is at our entry price at 1288.25. You can also see that, okay, we've been filled there. You can see that what will happen sometimes is that the market will go ahead and actually hit our price and not fill us. What I'm going to do here is just go ahead and cancel that buy limit at 3 points, and instead I'm going to go ahead and I'm just going to manually trade this final position. So I'm going to put a buy stop in there for just 1 contract because we only have 1 contract left on this trade, and right now I've got it in at break even. And this market, I think, does have some pretty good potential to move lower. So what I am going to do, instead of just doing it manually like that, I'm going to go ahead and just if we can get some good selling in here. Okay, we've got a selling, what we consider to be a selling paint bar. So this is a blue bar. It's still being formed, but it has reached the criteria to be a blue bar already during the bar. And these are 1-minute bars, of course. So what I will do then is I'll take a note. 86.75 is the high of that blue bar. So I'm going to lower the stop down to just 2 ticks above the high of that selling paint bar. And this is one of our trade management techniques, so we can actually use the structure of the market in real time to determine precisely when and at what price we want to go ahead and make that adjustment on our stops on our final 1/4 of our position. We can see here now that this next bar, this bar forming right now, is also a paint bar. It's a blue bar at this stage, and so as long as this current bar here closes with a lower high, then we will make another adjustment on our stop, and we would lower it down to 2 ticks above the high of this current selling bar. And you can see that it's at 86.25 right there. So I'm just going to bring the buy stop down to 2 ticks above that, which is at 86.75. So should the market now rally up against us and hit 86.75, we have locked in a 1.5 profit, because you can see we're still short one contract from 88.25. So that would lock in a 1.5, which is the equivalent of 6 ticks on the final partial. We've already made 6 ticks on our first target because we exited 2 of our contracts at that price. So 3 ticks times 2 is 6 ticks. So we've made the 6 ticks on our first target, and we've made the 6 ticks on our second target. So that was just one contract, but for 6 ticks. So so far we're up 12 ticks, which is $150 on the trade, and we've also locked in another $75 here, or a 1.5 on the final partial. So we're just going to keep monitoring this market, see if it does continue to go lower, and if it does, if we're fortunate enough for it to keep going lower and producing selling paint bars. We consider a selling bar to be any bar that takes out its previous bar's low. As long as it's not an inside or an outside bar. So if it takes out its previous bar's low, then we consider it a selling bar. So this most recent bar and its previous bar, in other words the last 2 bars we're looking at right now, we'd consider those as inside bars because they did not take out the high or low of their previous bar. So that's why there's been no adjustment on the stop in the past 2 minutes here. So it looks like it, I think the market's got some pretty good potential to move lower. We were thinking, okay, we just made a new low there. We're thinking on the last video that we had sent out that we were actually looking at 1290 as the next target lower, and should it hold below there, then it could have another good run lower. And so this is good. Now we've got another selling paint bar forming, and so we will be adjusting our stop here. As long as this high holds, we will adjust the stop at the end of this bar. Good. So adjusted it there to 86.25. 2 ticks above the high of that cyan bar that has just formed. Okay, this is looking good, continuing to make lower lows. We've got another selling paint bar, so it looks like we'll make another adjustment on our stop once this bar has closed. Okay, there it is there, and we'll just bring it down to 2 ticks above there. So 86 is our buy stop now, 2 ticks above the high of that most recent and lowest selling paint bar. So the software, as you can tell here, it not only gives us trade setups and triggers when to get in, but also how to adjust it. So the high on this blue bar, it's 84.50. So I'll lower the stop here to 85 even, and we will lock in 3.25 points on the final partial here. Should the market rally, hopefully it'll keep going lower. So we've got 12 ticks or 3 points already, and we're going to lock in another 3.25 points here. And each 3 points, or each point, is $50. So 150 locked in, already realized, and another 3.25 points would give us another 162.50 should we get stopped out on this. So a little over $300 on the trade should we get stopped out on this. It looks like it might have a bit of a bounce here, so we'll just continue to monitor that. But this is a nice trade. I mean, we've only been in this trade about 12 minutes or so, and had a nice movement on it. So looks like it's kind of stalling here on us. Hopefully we can get another wave of selling. But if not, that's still a nice trade. Total of 6.25 points should we get stopped out on this. Okay, there we go. We just got stopped on the final partial for a 3.25 point gain on that contract. And a total of 6.25 points on that trade. So nice trade. Lasted about 14 minutes or so, something like that. So anyway, thanks for watching E-mini Day Trader live trade from Monday, June the 6th, 2011.